Any questions? Just press the hand button, and I'll give the mic to you so you can talk through it. And I'm just waiting for Satish to actually join. He sent me the reports that I'd asked him to. Because if he doesn't join in about 2 minutes, then I'll just start with Will's stuff. Um, okay, just give me 1 second. I just want to make sure that. Um, so yeah, it's anybody wanted? Okay, Will's got some questions. Hang on 1 second. Unmute Will. Will, you're live now.
Hello, Amba. Last class, I think I was asking you something before the line dropped, and it was pretty much if you could just quickly go over the no money deal section, and when we were talking about using investors and so on, and how it works with the trusts and yeah, just wanted to see if we can refresh a little bit on that session. Yeah, exactly. So that was what we're looking at.
Hang on 1 second. I'm opening all the ones that we discussed regarding the no money down deals. This is your auntie with the land.
Yes, Amba, is there any way that I can get that? Has this class been uploaded, or do you think you can send me that as well?
Yes, you will be able to get that. This last week's session, when we complete, you'll get all these ones that we discussed, all the examples. I'll convert them to PDFs, and you guys can download them. That's no problem at all.
Perfect. That program that you're using, is that called Xmine?
Yeah, it's called
Is that the
Xmine.
one?
Yeah, that's the one I use. I have been using it for 5 years now. I really love it.
Yeah.
So yeah, everything that I do, it just starts off in Xmine first, and then once I've got that clarity, I then do other stuff. So it's a mapping software. Yeah, and it's for Windows and Mac as well. They also have an online version now, but I'm not very big fan of the online version as yet. So
No, I like it. It's a good program to explain something, I guess. Yeah.
sure. So can you just tell me the scenario once again, and then we can build on what we already got.
All right. So just by looking at this diagram, I'm just remembering what we were chatting about.
So
And
from what I remember, what you were saying was Auntie's got a piece of land. You want to give her some money. You can go and get plans and permit and all of that. And then I discussed the issue where if she lives in that property, it's her PPR, which is primary place of residence, so that she's exempt from capital gains tax. So you'll have to determine some sort of a value. Like you'll have to go and get a valuation. That's where I came in here, where you can get a valuation, and you need to check this with your accountant whether or not you need to get that valuation before the DA or after the DA, because after DA the valuation would be more, because then the site is actually valued based on its development potential. But that may not go down well with the ADO, because ADO will, looks at things like what was the intention from the very beginning. So if the intention was to actually go out all the way and develop, it's going to be an issue. But the intention was to actually just get the DA and sell. You could still be exempt from that. But again, as I said, you got to check this with your accountant. What would be the best case scenario for her? And I know that from a landowner's perspective, the always the best scenario is to actually just sell it, whether they sell it with DA or without DA, because especially if it's a PPR, it's not their investment property. They are exempt from capital gains tax. So if you put in the land value now, let's say for $1 million, which hasn't got a DA, and then she goes out and does the development and everything, and then she makes let's say 900,000 in profit on that, she will be paying almost 50% in tax that year.
okay.
But if she'll be paying tax on the, let's say 900,000 was your profit, she'll be paying tax on 900,000. But if she gets a DA and then sells it, and she manages to sell it for 1.3 or 1.4, and she still becomes part of the development somehow, then she only pays the tax on the let's say she sold it for 1.4, she only pays tax on half a mil. But there is no way for her to get away from that tax, because my death and taxes are certain. So if you make money, you pay tax. It's very simple. So she should be happy. It's a good problem to have that you gotta pay tax. But then, as I said, you and her need to go and see an accountant who can do the tax planning from this perspective. And what I was saying was that you can form another entity here that does the development management, that reduces her tax liability. See, your development management fee would actually be a cost to the project. So if let's say 200,000 or 250,000 comes to you as that, then you pay tax on 250,000, and then you return some back to her, whatever your arrangement is with her. It's up to you, but somebody has to pay tax on that money, whether it's coming into your pocket or her pocket. Only thing that you can do is adjust that profit where it's going, so that you don't fall into the highest tax bracket. That is all you can do, and that's all legit. And your accountant will tell you.
Yeah, that's good. I think I really need to go see an accountant. And I need to find a very smart one as well, with all these strategies and so on, and especially as well for the project in the project report that I've sent you, and getting investors involved. I think I need to go see an accountant for sure. Definitely.
Yeah, and you can also time it so that some of the sales settle before 30th of June and some of the sales settle after 30th of June. And that way you can distribute some profits in the previous financial year and some in the other financial year. So you need to check these things with your accountant. It's they're not loopholes, they are all legit. They're all legit. But as a developer, we also make sure, I mean, making money is a good thing, but we also make sure that we don't end up with $1 million profit in a kitty in one financial year, because half of it will go into tax. So we actually pipeline our developments, so that this is coming off this year, this is coming off that financial year, and this is coming off the other financial year. Also keeping in mind that we can't have any one financial year where no development is coming off, is completing, because then it affects our serviceability. You know what I mean? It's a fine balance in this. And I think another number one skill that you'll need to master is managing cash flow if you intend to do this full time.
Yeah, lots of strategies. Lots of you gotta get very smart to strategize everything here.
It's just
all right, and I won't lose more time. If you don't mind, do you think we can go into the project report, which I want to have a chat regarding that one?
Yeah, sure. Okay, what you sent me is this right here. Okay, run me through what each one is.
Okay, so basically I didn't want to, because I was originally going to put it all on a PDF file in Adobe, but I didn't want to do that, because I wanted you to be able to change some things and try to move the fee so if you needed to, and see how much profit would be if we were to allow for this. But basically it is in order. So it goes, one is the presentation, which is your project report. Number two is, let me open it up as well, I think it's the market research and so on, and then you've got the feasibility, and it goes in order.
Yeah, sure.
So you can open one by one in order.
So we'll open them one by one, and we'll go through each one of them. So okay, this is good. Around development, this is for this address in Seaford. Great. This is the report date. Awesome. Okay, let's just keep going. Executive summary: the report proposes a development project in Seaford, Melbourne. Project holds that block, 2 existing dwellings on it. Project constitutes a 5-townhouse development on the lot. On a 1,500 square meter block, I would be pushing it for at least. Just give me 1 second. I'll tell you how much, how many.
You probably need, but
about 14 minimum, like a minimum 12 to 14, if not 10, but definitely not 5.
What 10 units in there?
Yeah, let's look at this address.
You're doing 2 betas, yeah?
No, I'm doing 3-bedders.
Holy shit! Well, this one has permits already.
Oh, it
So I was
already has a
using what they
permit.
have already.
It already has a permit.
What's that? It already has a permit. A permit is ready to go. Um, what I have realized though is that I've done some study in the demographic and so on, and spoken with the agents in the area, and I actually do believe that people in Seaford, they actually value big properties. So like they like townhouses with space, but it all depends to how much money you make at the end. But I think that the demographics in Seaford, they do like decent size townhouses. These ones are pretty big. Some of them are like 20, 28 squares. They're huge, couple of them.
What do they want for land?
We're looking at 1.6 at the moment.
For the whole
We'll get
site?
to the feasibility.
For
Yes,
the whole
for the
site
whole site.
with 5 on it?
1.6. With plans and permits, yeah. We only have town planning at the moment. We don't have working drawings.
That's okay. But you do have, you basically do have the permit.
We do have the permit, which is yeah, pretty good. You've got it's literally 2 blocks. Each block is 750 roughly, 750 square meters. In one of the blocks you've got 3 units, and then in the other block you've got 2 big units. They're very big.
This looks like a good site, but have you read the permit conditions?
No, I haven't. I haven't gotten that far. I've literally done this over the weekend, so it's been pretty busy. But no, I haven't gone that far. But yeah, that's another important point to have a look at.
Where is 45 is across the road?
Sorry, it's not 45. It's 46. It's 45 and 47. So across the road, 45 and 47. Those two all units.
Yeah, just check out if they say anything about has it got endorsed drawings?
Yeah, no, we only have town planning, just town planning. But I'll have a look at the conditions. I'll suss that out.
See, looking at, you're not retaining any of the units, are you?
No.
1, 2, 3, 4. So see, this is a similar size block right at the back, 14 and 16 Roslyn Avenue, and
Might be.
they've got 4 on them. So you managed to get 5 on this block, and I understand where you're coming from, where people like bigger. Yes, because Seaford is still affordable. There's good value there. So from the price that you are getting it for. Well, I'll look at the feasibility in a second, but let's just go through this this report. The project had approved plans and permit. Durham has prepared a financial feasibility for the project based on 5 townhouses. Will manage and deliver the project according to the tentative project schedule. The aim of this report is to educate potential business partners. Not really. Don't try and educate your investors ever. Well, you do need to educate them of the process and everything, but don't put it in writing. And don't ever say that I'm trying to educate you, because that what you're telling them is that they are stupid. We know that they're stupid, but you don't need to tell this to them. I mean, I'm just saying that in a in a joking way, but it's the thing is they don't know a lot, and a lot of investors who come together for it, especially people with money, never ever write that you're trying to educate them, but do educate them. You know what I mean? But just don't say it.
I guess I can put that sentence perhaps without mentioning the word education. Maybe I can I just wanted to say I just want to make them understand the ins and outs of the project. Is to explain or propose, or I can change it later. Yeah. But I know what you're saying. Educate could come as something different. Yeah.
It's just basically you do know more than they do, but you don't just rub it to them. So this is pretty good. You've got 3 4-bedders, 1 3-bedder, and 2 2-bedders. This is pretty good. This is a good site. This is a good site.
Yeah, they're huge. They're pretty big. Actually, I like it because one of the townhouses has 300 square meters with backyard. It's literally a house.
In order to achieve success on the project, the following objectives must be met within the designated time frame. Raise capital from private investors, purchase land with required settlement terms, appoint consultants, create full set of working drawings, tender construction, and finalize builder, appoint a sales agent to sell the townhouses, obtain certificate of completion, sell all 5 townhouses. So yeah. So the following constraint pertain to the project development subject to um, raising capital. Development subject to raising capital prior to procurement of the land and construction. Assumptions. The following are a list of assumptions. All parties should acknowledge that these assumptions are true and correct. This project has the full support of the project management team and stakeholders. Potential business. Okay. We'll develop 5 townhouses and project manage the development from concept. No, the concept stage, you're already past the concept stage. Concept stage is when it hasn't got any that. To final sale, the project requires initial funding from private investors. Investor will trust management team to make decision with respect to this. Yeah.
But what I have, sorry to interrupt, I have realized is that this project report, I used the template that you had on the online course. I have, however, changed a lot of the things in terms of the structure and how it is.
You feel free. I give you a backbone, a skeleton, basically, and then you can arrange it the way you want to arrange it. That's no problem at all. So long as it covers all that information.
Yes, but the thing, Amba, the thing is that the project report template that you had was actually a JV with the landowner from 2013. I think that a project report for an investor is actually an investor proposal, and it is very different in the way you put it together. Like, it's got a funding table that I have sort of done, but I don't know if you've probably done a report for an investor, and I don't know if you have some feedback as to what to include and what not to include. And
yeah, that's what
we'll see what I'm
that's what I'm saying. Where you instead of saying that there's always a risk that cost may overrun, instead of saying that, you say to tackle cost overrun, I've allowed X percentage of contingency for this, and this. So you'll have to expand the feasibility, and you'll have to do the full scale feasibility on this rather than the 2-minute feasibility on this, because it already has a DA.
Yeah, I have to. Yeah, and we're gonna get to it. I've actually let
Have you signed the contract?
What's that? Sorry.
Have you signed the contract?
No, of course not. No, I haven't signed anything. No.
Or subject to due diligence or something?
No, nothing. Nothing at this stage.
So how long has this site been on the market? Because it doesn't come up as a listed site on realestate.com.au. I mean, both sites came up.
I can tell you. I can tell you right now. Give me a sec. It hasn't. I keep an eye on C4 all the time, so it would have been there for a long time. I'm gonna go to property investor, and it will tell me. You're racing me.
It's going into an auction.
Yeah, it is going on auction, but it's got the possibility of selling beforehand. So if the agent receives a good offer, he will take it out of the auction.
Yeah, that's always the case. It's always the case.
Yeah, but I'm trying to go for 15% development margin, and offering more will ruin my development margin. But yeah, it's a good site. It's very close to the beach as well. In my report, I've got the map as well, so you're gonna see, and I've got my map with the relative sales as well. At the moment, it's showing 15% development margin, which is all right.
The selected builder will have a track record of unless you've actually selected a builder, it's this line shouldn't actually be here. In fact, it should be something along the lines of there will be a fixed price contract with the builder, which you actually put that over here. So this line, will have a track record. It's good when you already finalize the builder, where you can say this is the builder that we're going to take, but you can mention something like that. In our research, we'll be looking at the builder track record or similar projects. You'll never know whether they finished the project on budget or on time or not, but you can put in that you'll do reference checks on the builder.
Yeah, I think I've got that below as well, actually. I think we're somewhere around
We'll
there.
engage a construction specialized lawyer to elaborate a complete contract which mitigates any risk and is in our favor. No. In our favor, actually, I'll just leave that there. And it shouldn't be like that. Like you shouldn't put it like this way. The contract would be in our favor. These are the things that you verbally convey, but when you are putting everything down, you gotta be 100% sure of what you're gonna put down, because you just provided a document claiming something.
We've got this building contract at work, and we are literally so tied up with it.
Yeah.
It's a design and construct contract, and we are screwed pretty much. But yeah, that's not the topic.
Yeah, it's it happens all the time. Sorry.
I wanted to ask you something on that line.
Yeah.
There is an allowance for 5% project contingency reserved over and above the construction contingency of 5%. So I know where the 5% contingency is, and it is on the construction and the feasibility, but I'm not too sure where that 5% contingency reserve is.
Oh no, this is a I did it in a different way when I did my calculations for them. That means, look, 5% contingency on construction has to be there, because when the bank looks at it, banks will not accept anything that doesn't have a minimum of 5% contingency for construction only. But for project contingency, you've got to add that 5% contingency on top of things like, let's say,
miscellaneous.
No, consultant costs and reports and any unforeseen circumstances. That's where that contingency should be. So as I said, that you'll need to do the full scale feasibility was something like this. We need a quantity surveyor to verify progress claim. You don't need to do the quantity surveyor in this scenario, because the bank that you go to will need to do will enforce a quantity surveyor on you for the construction loan. So you over here you can mention that the bank will engage their own quantity surveyor for verification purposes, and whatever quote that you get from the builder, that quote has to come within 5% or 2 to 3% of what the quantity surveyor comes back with.
Mm-hmm.
So builder to have appropriate and sufficient homeowners warranty insurance, that's fine. Failure to raise capital of the project, there's a risk of failure. That if you're unable to do it, see, when I put that report together, the project didn't have plans and permits, so you got to adjust it so that now that it has plans and permit, you have to adjust it to show that it already has a DA, so the risk have been mitigated. We know what we are getting into. In my scenario, we didn't know that if we were going to be successful with getting 4 units. So I had to put in things like, there is a risk that all these things can happen, but in your scenario you already have a DA.
Yeah, I'll probably reinforce the fact that we actually do have a permit and the DA and so on.
Yeah. The market price would go down in end value terms. It may not be the same in the feasibility. What I would do is do 2 copies of the feasibility, but in one you actually reduce the price of the sale by 5% and increase all the costs by another 5%, except for construction.
Smart.
For construction, just leave a 5% there. And when you show to them, you say, look, this is the fire sale scenario, and this is the normal scenario, which is what we are trying to achieve. But that way they've seen, okay, he's showing me 2 feasibilities. One's the best scenario. This is what we plan on achieving. But if they are happy and comfortable with getting into the project where you showed them all the costs have gone up 5%, and all the sales have gone down by 4% or 5%, and there is still 10% development margin in it, or 11% development margin in it, and you are still coming over the top, people would be more willing to step forward in that scenario.
Okay. I'll present different scenarios. I
So,
guess.
so you'll have to do a feasibility, then save it as normal, and then save it the other one as fire sale or contingency scenario. So yeah, according to research on Melbourne property market, we are on the path to slow but steady growth. Not really. I don't agree.
Yeah.
Agree with this, because there are both school of thoughts here. There's a report by Colliers that recently came out where they've shown that Melbourne is the hottest place for property at the moment, and how it's driven by all the people who have migrated here, and it's happening because of strong population growth, and not because of anything else. Not because of people paying more than the market. It's because of that shortage in the supply side of it. So you can actually, when you're presenting that report, you want them to present the positive scenario because you're a positive person, But I would present them both scenarios. And you say decline in property values. Over here, instead of writing this, you could say I've attached another feasibility where we've taken into account 5% fall in prices and 5% increase in costs. And that way, when they see both of them, they know that you're not trying to hide anything. I'm trying to be as transparent as possible with all my investors and show them the best case scenario and the worst case scenario.
Okay.
So
That's smart. That's good. I'll
so
definitely do that.
it's just being transparent.
Okay. You actually think we're gonna have some growth?
I don't think
in terms of.
I don't think that it's going to grow at the speed that it was growing before, but I don't. The market could be flat, but I don't see, property market crashing at all.
Yeah. No, me neither. No.
So there could be a correction, and that is why you are presenting another feasibility where you are saying, look, market could correct by 5% in this area, but Seaford still is a sought after area because it is affordable, close to the beach. People love it for the lifestyle, and if you show them comparable sales, because you based everything on the comparable sales that you've got, you show them the square meter analysis that I showed earlier in the thing of how it could be done. Then you are not trying to hide anything. You've from your side, you've been as transparent as possible.
Yeah, that's what I want to do. I literally want to, it's my first one, so I want to be as transparent as possible and always.
No, even on your even on your 10th project, you gotta be even more transparent. You know what I mean? Not just the first one. So complete construction 5 townhouses with certificate of completion. All townhouses will be sold to collect the profit and then distribute them between the members. Instead of members, I would put unit holders and shareholders. So that there's no members of the project as such. When you get into the actual vernacular of this industry, it's projects, it's shareholder and unit holder. Summary milestone. This is good, so you can say, look, this. What this is missing is the fact that you've got no control over the project at the moment. Like, you put it together, which is great, but in most scenarios, what you would want to do is that we've got it under the contract. It's signed up with a 30-day due diligence clause, and that's the timeline. And then you can put that timeline in there, that due diligence finishes this date, deposit due this date, and X, Y, Z, and so on. Another thing that you'll have to do presenting something like this, you got to get all the costs from an architect. So if this already has plans and permit, you would have received the plans and permit, and you would have received the copy of the planning permit conditions. I would pick up those drawings, find out where that architect is, give a call to that architect and say, look, I'm planning to buy this property. Can you give me a quote to do everything, to do the working drawings, to engage all the consultants, to complete the working drawings and get a building permit? So they'll give you their fee proposal. And that way you know that you can add that fee proposal in your feasibility, attach it to this report and show them that, this is what we need. This is the money that we need up until construction. Or when you do your construction feasibility and you calculate your finance on that side, I gave you a different sheet for finance calculation where you can actually put in the TDC amount, put in a percentage, and figure out this is what happens if you go based on TDC. That means you go to the top 4 banks, or if you go to the third tier lender or a second tier lender where they can lend you based on GRV. You figure out what the total developer's equity contribution is going to be, because even if you can get your pre-sales, the bank will still require a certain amount of developer's equity contribution. But if you are settling on the land completely, 100% with your collective money, then that equity is a lot of equity. What the bank will then look at is the debt they're going to cover. So they might ask you to get you 2 pre-sales or 3 pre-sales, and that way their total debt is covered in that.
Okay.
Once their total debt is covered, they can approve the construction loan, and you don't need to have that serviceability, but their debt needs to be covered. The only way you guys can get to that stage is if you paid the land out, so there are no holding costs. That means how much did you say the land was?
1.6.
So 1.6 plus stamp duty plus the money that you need to get to the building permit stage, because building permit stage is where you can tender out and you'll be able to get a quote from the builder. This is what we can build it for.
Correct. No, yeah, that's is my. If this project is, I'll see how we go after this class that we're having right now. But if I'm still interested, which I am, I'll probably speak with the real estate agent and try to get it out of the market and maybe going conditional first.
Very hard to get it off the auction unless you go unconditional with an offer before.
And you pay. Yeah, but well, let's keep rolling, and we'll see what's in here.
Yeah, so this is what you need to plan out using a Gantt chart. I use this tool called Smartsheet. The Gantt chart that I've shared with you guys came from Smartsheet. I don't have an Excel version of it, but yeah, you can make one. You can actually. There are quite a few Gantt chart things. If you have a Gantt chart, then people know that you are serious about what you're doing. You put it there. When I actually put this report together back in 2013, I was starting out, so I was trying to do JVs with landowners. I was trying to do all of that. I didn't have the Gantt chart to actually put it in there, but I would put a Gantt chart in there with this timeline. And
okay,
if you wanted to know where to get this Gantt chart, I can give you like a free option to get it. So everyone familiar with Google Sheets?
Yes.
So if you go to Google Sheets, for example, there is actually a add-on over there about project scheduling. So if you've got Google Sheets, go to Google Sheets, and in the Google Sheets, it's got, if you search on add-ons, there is an add-on over there to do a Gantt chart, and you can use that. That's pretty good. It works just as good and it's free.
Okay.
So
yeah, definitely, I'm taking
project
right now, so I'll definitely do it.
Approval requirements. Project is considered closed after all 5 channels are sold. We return the capital and profit to investors, the borrowed amount to all creditors, and close out all legalities involved with finalizing the project. Please advise if this is the best terms for priority order. Should the debt be paid first? No, the debt has to be paid. No, but this is project approval requirements from the investors.
Yeah. The second line is perhaps irrelevant to the title in there, but
Okay, around developments will return the capital and profit to investors, the borrowed amount to all creditors, and close all legalities. This is the project approval requirements are the requirements where you got to come up with the money in order to be able to get an approval from all stakeholders. So all the stakeholders, if they say yes, we're going ahead with this, that's when you get a project approval.
Okay, cool.
Okay.
What we're on that note, in terms of let's say I've got one investor and we've got the project. Once the project is finalized and we've received all the profits, do you pay the debt first and then the investors, or Do you pay investors first and then the debt?
The,
Is this up
the
to
first
you?
thing is that as soon as you start settling, the bank would be there to get everything unless the bank is paid out. As soon as the bank is paid out, the next thing that will get paid out is your GST liability on the project. Once the GST
Okay.
liability is paid out, then whatever is left is your profit is distributed as per the shareholding.
Okay.
Capital raise at the moment is 250. 887 are yet to be raised. So you need to, okay, so you've come up with a developer's equity of 11,375,500. Okay. The exit strategy should
That
be
is at 35%.
would be selling all townhouses and paying investors first as per their capital investment profit. Need to elaborate more on this section. Your exit strategies in this scenario, there are actually none. Once you are actually in the project, because the project already has a DA. So in my exit strategies, I usually offer investors, if it hasn't got plans and permit, and we are getting into the project at the start of the project, I offer them that, once you get a DA, somebody else can buy your shares and come into the project and you can get out. And obviously the value of the land would be different at the time than what it was. However, you can't say that, oh, I'll buy a share. Or you can say that you'll have the first right of refusal if somebody wants to buy out. That means so you have an option to buy somebody else out, and you have the first right of refusal on that. However, you can't say that you'll arrange somebody to buy that. So usually that is why all the risks are highlighted up front, that once you're in the project, they find somebody else they can sell their units to, and that person can come in at that stage, or they don't. It's that's how it works. Yeah.
Okay.
So in this
Good to know.
scenario, the exit strategy is that if they finish the project, that's where the exit strategy is. So it won't be like, okay, somebody pays in the money and then a week later they say, oh, sorry, I want out. No, the units have been issued to them. The project
Yeah.
can't refund the money back to them. So everybody needs to be totally aware. All of you who are coming together to do this project need to understand this 100%. Developers' equity comes right at the end after everybody is paid out. Okay?
Okay.
So,
That's when you collect it pretty much.
yeah, so as soon as the bank is involved, bank's got first mortgage. Any money that's coming in, bank's taking that money first.
Yeah. No,
As
that's all.
soon
I get
as not only that, the bank will not even leave enough money for you to pay the GST. So let's say you sold something for 700,000. Now 700,000 is your selling price, but it has GST built into it. That GST is bank is not giving you not taking the X GST amount. The bank is actually keeping all of 700 until bank's getting paid. So your BAS will come up where they will say, the ADO will say, look, you need to pay us because you just sold $700,000 worth of property, and our the BAS the GST on this is X, and this is what we need. So that way, again, you need to check with your accountant what's the best way to schedule this. We do it every month, like we schedule our BAS every month, because it's a lot of cash flow that goes out if we wait for 3 months, because money is going out of the account every day and we need to have more cash in there. So we do it every month, and that is why if you already got your 4 pre-sales or 3 pre-sales, you already know, okay, 3 pre-sales is good enough. Some of it amount will go to the bank will be gone, and then some of it will go to GST, and then the last 2 is usually the developer's profit is in the last unit that's left to sell.
Okay.
So yeah.
With talking about the pre-sales and so on, I've allowed for a 35% developer equity in terms of what the bank is asking me to bring on the project. Do you know if a 30% is also a 30% on TDC is also viable? If we were to bring some pre-sales for the bank, is that something that could be a possibility?
Look
for us?
30% pre-sales. Sorry, what was the question again? 30% TDs, 30% LVR. What 30% developers equity? What was the exact question?
In terms of the bank telling us how much do you have to bring for the project,
Yeah.
I've allowed for 35% of TDC. Does the bank sometimes allow you to bring only 30% of TDC?
No, no, no,
And
no, no.
perhaps,
Look, they do, but I've been doing my numbers on 60/40.
okay,
I've been doing my numbers on 60/40 because APRA the macroprudential measures introduced by APRA to curb the property market. All top banks have lowered their LVR. I know
that's crazy.
for the 12 units that we just finished, bank gave us 70%, no problem. Um, However, I keep talking to my thing, and he said, look, now we are doing 65, 66%. So in my feasibility, I go with 60/40 now, just to have a little bit of buffer on the side that, if there is some scenario I need money or whatever, I've got some money. So always have a good buffer sitting on the side. You cannot afford to be in a project and then run out of money halfway through.
Okay.
Then you'll
Okay.
either try and cut corners, scale down your specs, try and reduce the price, have fights with all the investors who are in there, because then the blame game starts. Oh, you told me this was the money that I needed to have. So always have that extra buffer built in there. What this report doesn't have is that if you don't deliver what you are saying that you're going to deliver, you're saying project fees, you want 10 grand to do all of this, then you got project management to completion, another 60 for this. All good and great, fantastic. But what if you don't deliver?
Okay. I'm not too sure if I'm adding all of these. I actually put a comment in there. I wanted to ask you if I don't know if I should add these fees and even show them these fees. Because do you always show your
You have to.
developers fees?
You have to. And I show it.
Okay.
I show it in big red and bold with every other text is actually black, and my development management fee is red. I actually show it so that no one miss it, because my hand doesn't shake, or our hand doesn't shake asking for money, because we're delivering something that very few people can deliver. So we actually
Okay.
I've made it a point to actually highlight it in my summary that, and it's in red, that there is a development management fee of X amount. But I go a next step further. I even highlight my builder's margin on it, because I tell my investors that if I don't deliver, there is no development management fee. We will give you 20% return on equity, and if we are unable to do it, there is no fee for us. And if we are still not able to do it, we will start cutting off our builder's margin.
Yeah, that's what. So that's sort of what I wanna. How I'm gonna propose it to my brother-in-law as well. I wanna tell him, look, if I'm telling you 25 return on investment, even if I need to eat from my profits, I will commit to that 25. So even if I do the whole project and I need to take money out of my profit, even if it's a big chunk of my money, I will always make sure that the investors are getting what I told them they will get.
This report that you are presenting to them, this report will eventually convert into a unit holders agreement, or it'll become an annexure to the unit holders agreement, and in the unit holders agreement you will say that, okay, Will is the development manager for this development, and that's the fee that the unit holders have agreed to pay to him. But if he doesn't, and this is the scope of his work, that he's going to do this, everything that you have mentioned in here. But in case he doesn't deliver on what he's saying, he loses, he won't charge the development management fee, or the development management fee will go down in proportion to, so that there is a minimum something there. This is so that it gives them a lot of level of comfort, and because you are starting out, it's you who's more desperate than anybody else, because you want to get your first development off the ground. Correct. And even if it's your 10th development off the ground, if you want to do this for the rest of your life, and you want to do this in a proper way, always offer that, because then they know that you've done your numbers properly. You got hurt money, or if you're part of the project, you say, look, I'm also part of the project. If the project doesn't perform well, I'm also losing money, so I have my skin in the game too.
Okay.
But
that will be the case.
Like, you can't feel sorry, or that you're charging a fee. Always charge the fee, because you're doing the work. There is a lot of work that needs to be done in order to bring the project to completion.
Correct. Yeah, that's what I wanted to ask you. Yeah, and look, the way I've put it, we'll get to that part, to a funding table that I did on Excel, and I'll show it to you. And there were some profits remaining, which I thought that the developer fees could come out of that. But yeah, we can let's do the market side. So that's the side. It's good how you can see the beach from the spatial photos.
Yeah. The value of the town in the area will most likely increase, or at worst case scenario stay where it currently sits. Say will most likely increase, or in the worst case scenario stay where they are. Again, over here I would mention that there is nonetheless a report, another feasibility report showing a fall in a market correction of, let's say, 4% on the sales value has been attached for your reference.
Okay. Okay, I'll do that.
They will be able to move the townhouses with no issue. The marketing team will be appointed in early stages of the project to get the full campaign done in time. Off the plan sales would be welcome, not welcome, would be required. Like, this gotta be required by the bank for sure. Gives us assurance that the market is hot and the demand is high. So you've got median average population growth in last 1 year 0.16. Seafood is a hot area, I know that, and it's still a little bit annual growth has been 11.8%. Great. Auction clearance rate is great. You should, from where you got this, there's also another auction correct for which month. So make sure you get that. What date is it actually correct for?
Okay, yeah, I'll put the date when it was the information was taken.
Yeah.
It would have been this weekend.
No, that Boom app at the bottom, it says correct for the month of, and it'll say October or something, because I don't think November stats are out yet. So yeah, having a positive year per year growth above average, this is all good. Comparable on sale towns in Seaford. Okay, now this is good. I would put this in a spreadsheet, and I would show that this is what it's sold for. Create a spreadsheet where I think I showed you one in one of the.
Yeah, I've got the spreadsheet. It's on your email, but we'll get to that one.
Yeah.
In later on. Go on my relative sales.
Yeah, so I would put that in a spreadsheet. Conclusion. Considering the excellent location, this da 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 da. This is all good. That's fine. This is all good.
Okay, and the bottom conclusion is just generic. It's very similar to what you put on, so you can skip it.
Okay, I'm just gonna go straight to your feasibility on this.
Let's do that.
Hang on. That's number 4 right here. Okay. 1.6 for land. This is good. 5 average construction area 178. So you've got this average construction area from here.
Yeah, have a look at my construction costs and the GRB as well. I actually got a quote to do the driveway. I've got to make this a concreter. He does a residential, and I just call him and confirm the price to do the driveway on the plans.
Yeah.
And that's how I come up with that figure.
Yeah.
Now I wanna get your thoughts on the GRB in terms of what I can move the units for. As you can see, I've got a relative sale that of a property that sold off the plane on the 10th of November. That one was 24 squares.
Yeah.
Now my biggest one is the one that I'm trying to push for 800,000. This one is roughly 26 squares, so it's bigger.
What's your square meter rate? What's your square meter rate?
I haven't done the square meterage rate, but I
See, I've put this table
I
here.
can do it.
I've put this table over here so
Yeah,
that
for
I can do an analysis of on both sides and see what it looks like. This is what you think that they will sell for. Looking at just the size of the property, saying, okay, four better, it should go for 750 or 800 or whatever. Your four better should be over 800. I would imagine. But you got to have that.
yeah.
But then I actually cross check all this stuff and say, okay, unit size is 194 square meters, and I can get $5,000 a square meter for this. 5,000 just jumps to 970. Now I've just pulled 5,000 out of thin air. But if you had done that analysis of all the pre-sales, see what the size of these townhouses are, put the sale
Well,
value, get a square meter rate, and if you've got an average square meter rate, you can play with different figures and see, okay, 4,500 is not bad. I reckon I can achieve 4,500. And that jumps the
no,
price to.
I'll do that. And I think that if I actually do that, the price will go up. Because as I told you, the one that just sold for 800,000 was 24 square, so it's actually smaller. But I don't want to say, I wouldn't like to estimate myself a price of a unit that cannot be sold, that hasn't been sold yet. So I don't know if I feel comfortable saying that, all right, I can sell this property for 820. However, none of the properties similar to this one has ever been sold for 820. That's why I'm playing it safe.
You are playing it safe, but you may not be able to ascertain the correct value otherwise. It's 1.125. I'm pretty sure that some big size units have gone for more than this. Also, in your construction, you got $1,600. This is, where did you get this area from?
The area that is the internal area of construction. That is from the plans, from the town planning plans. I didn't see the plans actually.
This should actually just make sure that this total includes your ground floor, your first floor, and your garage. So if it includes these three things, don't include the private open space, and don't include the balcony if there is a balcony there.
Yeah,
but
that's including everything, but the open spaces like your backyard, your balcony, it's just internal space, and the garage. So this is like construction area pretty much.
Yeah. So what I would want to do is say, look, on an average, on this side, if you go this way, your average sale is. Whoops. Okay, I'll just do it here. Okay, let's say you're getting an average of 844 on this scenario. And over here, your average is about 750, I reckon. I'm pretty sure this is 750. So yeah, it is 750. So you're getting 750 on an average here, and you're getting 844 over here. If you take, I think your units will go for more than your 750 average, because you got 3 4-bedders, 1 3-bedder and 1 2-bedder. So your 2-bedder could be, let's say 700 or 650 maybe, but then your 4-bedders are quite high. Now I would still keep them under 850 as an average for sure, but let's say in your feasibility you jump this up. Okay, this is already being picked up from here. So let's say we go with GRV2, for example. You get an average of 844, and your profit just jumps up here. But at the same time, even if you do that, it's going to be... I just think that you need to get this. So what I would do is take those plans to 2 different agents who are in that area. Ask them to give you an appraisal on each one of those. You tell them, I've got to go and sell these. And what can you give me? The guy who's selling it, ask him, what do you reckon we're gonna get for this? And then now he might be giving you an inflated figure, because he doesn't have to give that to you in writing. So because he's just gonna verbally say it to you, take that figure and cross check it with 2 different other agents, and see what the rate is that they're getting as a square meter for something like this. Show them the plan. say, look, this is, I've got 4 bedders and I've got a 3 bedder, 2 bedder. What do you reckon? What can we get in that area? And some agents will give you that that price. You tell them, I'm buying this property. I just want to get a feel of what the market is at. How much do you reckon? They'll give you those details. They'll also they might give you 750 for this, 800 for this, 250 for that, whatever. And then they might also give you, look, there, if we in the market we can easily achieve $4,000 or $4,200 a square meter. So if this is, for example, is $4,200 a square meter, that that's why different set of feasibilities to be able to run these scenarios and see, okay, it's $4,200 a square meter, and what do I get for that? I get a 787. That jumps my profit to about 20.16%, which is good. That means that if my yeah. Hello?
Sorry, no, keep going. When you finish the sentence out.
Yeah, so let's say your construction costs
Can you hear me?
I can hear you.
Yeah, me too. Okay.
So in that scenario, if your construction cost is $1,700 a square meter, you can still, there is 17.86. If your construction costs come out to $1,750 a square meter, you still got 16.74. Because I think that because of their sheer size, at the moment you are going with your highest unit. Okay, this is not that. So your biggest unit is this: 264, 199, 248.
Correct.
I'm just looking at the average construction cost here. 225, too low. Unless it's got no specs at all. But at 1750 a square meter, see, the reason I feel that this is too low is because I don't think you've got this area right. This area looks really small to me based on the actual big size units. Like, I have not built a 4-bedroom unit that was only 151 square meters. A 4-bedder built area must at least be 160 plus or 170, if not 180. 150 is a 3-bedder.
You know what I don't know? I don't know if the driveway area that I've got in there, I don't know if that driveway is actually part of the garages for all these units. I think it could be part of the garages.
Don't worry about accounting for driveway as such. Get the internal area right. That's okay. This is what this exercise is for. You haven't signed the contract yet. This exercise is so that you get your numbers correct. You figure out what these numbers are, how they're going to come together. That's the portion.
I've seen the plans as well. You want to have a look of the town planning. The areas in there.
Look, I've got to go through the Satish's report as well. So
that's okay.
Yeah, but you would want to find out more details about this, break it down even further, and then do it that way. So
okay.
Hang on one second. Let's look at your finance calculations.
And after the finance calculation, I want to show you as well of my investor funding table. I want to see what are your thoughts on that one.
So on the land, you're borrowing 80% at 4.5% interest. I don't think you can get that. So 4.95 is more like it. For 4 months, okay, before you get your pre-sales. This 4 months, have you taken into account December, January? Because 15th of January to 15 December to 15 January, market just dies. Not a lot happens during that time. So,
okay.
Yeah. And before you can actually get ready for this from day one to end of project, yep, this is fine. Developers equity, yep, this is fine. Total developers equity cost 65.35. This is also good. So you know that you need about 811 there, and then you would have added the remaining amount that you got to come up with. That's why you got 11 something 1.1811. Yeah, I see where you got the numbers. Lender cost on land, interest 9 months for the build. I would allow 10 months. So that you're going to get the right number, which is fine. Cost of developers equity construction. Okay, nothing for the developer. Okay, so 129. This is pretty much okay if you can knock the project over in about 13 months or so. This is about right.
Yeah. What are your thoughts in terms of doing the whole project in 14 months max? Do you think it's possible?
Yeah, and with plans and permit, might we build the project in under 9 months. 4th of October we signed the
Correct.
contract and we finished it, but we've done a few projects by now. So yeah.
So it was showing me 15% development margin. How you saw it with the construction, and also using the rate, estimating my GRV like that. I just used the rate from the other property, and the GRV went up by a lot. So I'm gonna play with that. But I wanna show you this, and I wanna see what you think. Now this is a case more tailored to my scenario. So what is happening is actually that I've got my brother-in-law. He's very interested in doing a development here in Australia. And my brother-in-law uses he's got investors that are his mates, and they do developments as well and property as well in Argentina and in Miami and in Spain and so on. But he actually offers their investors 15% per annum on return on investment, 13 to 15%. Now the time frame for this will be 1 year as well. So I'm saying a return on investment of 25% on 1 year. I could probably say on 14 months just to play more safe, or 15. But so what I'm actually telling him here is, look, his name is Leandro. I'm telling him, look, Leandro, I'm giving you 30% return on your investment plus 5% per each one of the investors you bring. So let's say if you bring 1 million of money from investors, you get 5% on that. So actually, you can actually change here the numbers. So you can actually change the percentages, not the money, but if you go to management team, head investor, and investors, you can change those percentages, and it will change the whole allocation of it. And I've actually realized that if he actually puts in the less money but brings more money, he actually makes more return on investment. So if you actually go below, there's a line that says actual return on investment 103. If he brings 50K and then from his money, and then 830 from investors.
I see that, but what is the return on equity on your project?
That is the return on equity on the project that I have at the moment is 43%. So if you go to the right hand side, you've got project assumptions, and you've got 43% TDC development equity. Now everything has formulas, so everything connects to the funding table on the left hand side. So I'm saying I've got 43%. Now I am committing to give my investors 25%. Also, you can see below there is profit remaining, and we've got 116,000 of profit remaining. In case there is some variations and so on, I can eat out of this profit to make sure that the investors are paid off. But yeah.
So basically, you understand, right? They're taking more than half the profit.
Yeah, in this case, it is like that, because I'm going in with less money, with $250,000, 250,000. If I was to put in more money, I potentially will make more money. But if I want to source out, 80% of the money, they'll be making 25%. Yeah, they'll be taking most of the money. But yeah, I'm still happy with it. But
just be careful, because you would know them, or your brother-in-law would know them, how these people are. They've got to be clear that the money would only come back after 24 months or something like that, or whenever it does come back. There are no monthly installments. Because you just have to see the propensity for them. Yes, of course, property development can actually offer, and in fact, if you went and got the DA yourself and everything, you would enjoy. We've done projects where the return on equity was 73%, 75% return on equity, and this, because it has plans and permit already in place, that's why it's 43%. But I also target 45 and above % return on equity minimum to be able to do the project. Okay, so when the profit comes in and then you can return that, so that means your project would only make 116,000 on the books, because the rest of them would be the cost of the money that you'll have to return.
Well, I'm part of the management team.
Yeah.
So the management team, so the management team, which in this case will be potentially me and John,
Yeah.
will be making 108 plus the profit remaining. Now, the profit remaining can be charged as development fees, perhaps, but they're also there in case there's some variations and so on, and we can pay investors. But I can also move the percentages on the head investor.
So tell me something.
Actually, tell my
hang on 1 second. How are you going to give your investors a return, because your total profit is only 116,000?
No, that's when once they are no. So this profit remaining is the profit remaining of the whole thing. So if you double click on the 116, you'll see the formula. So it's actually all the profits that have been already paid to investors, that one, minus the total profit of the project. That is what is remaining. So investors have been paid already.
Okay, so what is the total profit of the project after you paid out the interest to your brother-in-law? Where is that profit? Because they can't dip into the profit until that loan, then the debt comes first.
Okay.
So where is that? Where is the total profit? So if I go back to your feasibility here,
The total profit of the project is in there. So you can see in green, profit 490,000. That is the total profit of the project. That comes from the feasibility. That little table comes from the FISO.
Okay, so in the feasibility, where is the total profit? Show me which cell do I go to for that?
So you go profit assumptions, go to cell M11, yeah. So M11, which is at 490,000.
Yeah.
That is the total profit of from a feasibility.
Okay. And in the feasibility, you have taken out the money for your interest. Have you
talking about the finance?
Hey, I'm
the
talking
finance repayment.
Yeah.
Yeah, that is all included. So this profit will be my net profit. So the money from the finance calculation and so on, that is all in the FISO.
It's 565, right? This is your profit. Over here you got 127, which is the money that you'll pay to the bank, right? So you've got the finance in there accounted for that goes to the bank. And after that you get 565 for the project. Now my question to you is that 800k or whatever you were getting from your brother-in-law, what is that interest? What is the interest on developers' equity? So what money is actually coming from the brother-in-law?
Well, that will say what? Can you repeat your question again, Amba?
In this feasibility will, you've got finance cost of 127,000. Correct. But based on the feasibility that you showed me, which was your finance calculations right here, you had 129. So that's fine, no problem. It's close enough. But this is only your construction loan, isn't it? This is your construction loan and you settling on the land. So that way you got this, and then you got 120.
I understand. I get what you're saying. So you're saying, where are you allowing their interest repayments for the investors in your feasibility, correct?
See, what is the brother-in-law going to fund? The money that you get from your brother-in-law is used for what?
Equity. So that's cash in my bank account to go to the bank.
So that's developers' equity, isn't it?
Yes. Yeah. You can. Yeah. That's a good way to put it. That's developer equities.
Yeah. So
equity,
so where is the interest for developers' equity that you have to pay them 20%? Where is that?
I haven't allowed for that on the finance calculation.
Well, then they have to be allowed for in there, and because your other investors who are putting in money in there, they can only touch this because that money has to go out first.
Okay. So you're saying pretty much you're saying put all your interest repayment for your investors on your finance table, and then your profit will actually show you what my Excel sort of thing is showing you.
How much money is actually coming from the brother-in-law, and is it buying units in there?
No, it's just cash, and it's paid as return on investment. So
Okay.
they don't hold units at all.
Okay, so they don't hold units at all. So that means, are you going to use their money to fund the development?
Correct. It's just cash. It's literally like if it was my money. It's just cash.
So there's no bank involved.
There is no bank at all. No.
Well,
no
then,
loans. It's
if
cash.
there is no bank involved, then your interest for the bank that you got at 6.3, Mike, should be 15%, because you got to pay them that money. And
Okay.
yeah, so let's say let's say you settle on the land, and lender interest cost for construction, LVR is 100%, okay? But even that, if there's no bank involved, the interest on the land and interest on the construction is 15%, isn't it? And I would be very realistic about the... Yeah.
Amber, sorry to interrupt you. I am not funding this. Look, this is all just a draft, yeah? I'm still deciding how to put this together.
Yeah,
but
sure.
I think you got me wrong. So the money that I have, let's say I've got $1 million.
Yeah.
That's not being used to pay off completely the land or anything like that. I am using the bank. Of course, I am using the bank to do everything. But what I was trying to say is that the 1 million coming from investor and so on is used as my developer equity. So it's used as the money that I have that will be my 35% that I need to come up with.
So why are you taking money from the investors then?
As my developer's equity?
Who is the head investor here?
That's my brother-in-law.
Okay,
that's my brother-in-law in there.
Okay, so who is this investor here?
That's a potential investor from my brother-in-law. That's just a draft.
Okay, so that's fine then. Then that means that even if the developers, okay, so you're doing this project on your own, all the developers' equity is going to come from you. That means it's going to come in from the brother-in-law. So then it's up to you how you distribute it. I thought you had 4 or 5 different people in there with you, who were going to put their money up front to be able to get it.
Yeah, no. So basically how it's working is I know I have to come up with 35% of TDC.
Yeah.
Now, to fund my 35%, I am using investors, which is I thought that's how you do it, but I'm using investors not to fund the construction, not to fund the.
That's right. I understand that you use the investors to come up with the 35%. Agreed.
For the capital.
But is your brother-in-law your only investor?
Well, he might have another investor.
That doesn't matter. But all your brother-in-law wants is like 20% return on their money.
Yeah, so he's giving me $100. He wants $130 once the project is completed.
Okay, so that means you own the project.
Yeah, I'm doing the project myself.
Yeah.
With potentially John, whatever it is, and we've got investors that are funding the equity.
Yeah.
So my head investor, let's say Leandro, he's getting 30% return on investment. So if he puts in $1 million, he's gonna get $1,300,000. His profit is $300,000 pretty much.
Okay, now I understand it. Because initially I thought that you're taking money from them as well, and then there's other investors and everything, and the costs got to be accounted for. So now you have profit remaining 116, which is basically you paid out every money that you borrowed from anybody to do the development. So you'll have 116 left over. Okay, that's fine then. Then you're on the right track.
Yeah, and because I was getting confused when you were telling me to put this on my finance calculations.
Actually, you should. Whatever the cost you're going to pay them, you can. But because it's just coming at an arm's length where they are not going to be in the project at all, and you're just saying, look, give me the money, I'll give you 30% return on the equity. Yeah, that's fine.
Yeah.
That's fine.
Yeah. Okay.
So if you can do something like that, yeah, absolutely. Okay. Will, I'm gonna pick up Satish's project that he sent me, which is this one. here, and this one here, and then I'm gonna get Satish on the mic.
Okay, thanks, Amba. Cheers.
All right, no worries. Thanks, Will. Anybody else has a question on what I was discussing with Will? 1 second, Satish. I'll just mute you for a second, and I'll just anybody wanted to ask any questions that we've discussed about Will's project? Any clarity on that, or anything that you would want to understand how that works? Okay, great. Then I'll take Satish on. Satish, how are you?
Good, how are you?
I'm very good. Okay, let's go through your project.
Yeah, cool. So this property is currently on the market. It's just under 1,000 square meters. Looking to put 4 townhouses together. A proposal amongst the property development students from here under a joint venture agreement to buy the land outright and finance the build through pre-sale.
Okay. According to preliminary meetings with architects, informal discussion with town planner, though its resources, through its resources, Satish has found that 4 town development is likely a possibility. Yep, spoken to council on feasibility of 4, which is certainly indicated as possibility. The objectives which mutually support the milestone delivers for this project have been identified. In order to achieve success on the project, the following objective must be met within the designated time and budget allocation. This is all good. This is all standard. What are the elements that delay pre-sale or not getting a pre-sale? Now, in your...
That's the question that...
Yeah, go on.
So I'm under the assumption that funding for the construction will come through obtaining pre-sale. The question is, what scenarios will the pre-sale be difficult? And if I don't get a pre-sale, what is our plan B? What is your thought process around this?
You just have to get pre-sale. There is no scenario. So if you've selected the site carefully, I don't see a reason why you won't get a pre-sale, because that's how all the projects are funded these days.
Okay.
So it's anything that they want to get or whatever. It's not like the project won't actually get built if it is not pre-sold.
Gotcha. You will sell if it's not pre-sale. You won't build, as you won't have finance. You may sell with DA.
Yes, because in your scenario you haven't got a DA. It's STCA, subject to council approval, and over here. Your out is that once you get a DA and you're not able to get your pre-sales, whatever it is, you can actually get the uplift, sell the land, get out of the project. That's your out. That's your exit strategy if you don't get your pre-sales.
Excellent.
Okay. Funding must be made available in trust account upfront by 4 parties. Yes.
So that was another option. If we can't get a pre-sale, I have serviceability, and possibly perhaps the other JV partners would have serviceability, and we can fund through a loan.
Yeah, you can. And if you go to the top banks, they do not always want pre-sales, so long as you can show them that towards the end of the project, if you haven't got a pre-sale, you can actually fund the project. So, yeah. The following are lists of mention upon agreement, signature of this agreement. The project has the full support for this. Raise capital, construction, and pre-sale not obtained. Again, raise capital for construction if pre-sale is not obtained. See, when you raise capital for construction, it's your project. Well, you can do that, but how are you going to do it? You can't.
I think it's more around borrowing for construction. I think raise capital is a mistake. It's a typo.
Yeah, it should be It should be more like not even fine. It should be more like source capital fund, private funding for construction, in case you are not able to get finance for that.
Yep. I think these are pretty standard.
Yeah, so yeah, so over here things like all the suggestions that I actually made for Will. Is your mic really close to your speaker?
No, right. What's happening?
Because I can actually hear an echo back into into my speakers. It comes out garbled, but I can still hear. So these are certain things that all the suggestions that I made for Will, they also apply to the way you structured yourself. Just make sure you take this out, because I used to go under the name under this name before I moved everything to PDS.
Sure. With this property, they wanna have a quick settlement, and they don't want to do a 12-month settlement. The property has been previously sold in May, and for some reason they won't tell why they are selling it so quickly.
Mm.
I need to find out more.
Where is the property? Where is this?
Church Road in Carrum.
Yeah, but
And there's a minor flood overlay. The property is number 18. Yeah, that's the one.
yeah.
So there's a minor flood overlay at the rear. So I've allowed in the feasibility for additional $30,000 for build for the last unit.
No. Flood overlay zone, you can't build at all. This is
How
the
are they built next door?
I've got no idea. I'm actually looking at a site recently. Is it flood overlay or is it land inundation overlay?
I will double check definitely on that. As soon as I saw blue, I thought it's flood, but it could be land inundation.
No, if it's LSIO, which is land subject to inundation overlay, they won't let you build a habitable structure on it.
Okay, what if it's flood?
You'll have to check this with the town planner, because see what's happening here is that you're actually, if you can't build on this side, like you could build one here on the boundary and then have a balcony sticking out, no problem.
Okay.
And you can come over that because the balcony is not going to get flooded. But I'm pretty sure the footprint would be a little bit. What's the address of this?
Number 18 Church Road, Cannon. And the other question is, why is the walk score only 55? The location to me is excellent. It's near the shop, near the station. I was hoping we get a walk score of 80 for this property.
Yeah, but it's not that close.
Right.
See, when they give a walk score, they look at all the errands that can be performed very quickly. Look, this should not be an issue, because if this is correct, 1820D is also built on it, which is this one right here and this one right here. This should not be an issue. Why are they, if they only bought it then, why are they actually selling it? They obviously know more about what you don't know, but they won't tell you why they're selling it.
That's right. That's something I need to investigate. Why is a quick turnaround sell?
Yeah.
I'm going to speak to a town planner regarding the overlay as well.
No, you need to go and see an architect and a town planner. So I shared. I don't know if you have those details. I think Will's already been to that architect in Melbourne. They're called ArcSign. If you want to go and see them, there's a guy called Ben, and I find them. They're not the top of the line, but they have a factory. Like they can do it for a very reasonable price.
What's the company called?
ArcSign, ArcSign.
Okay, cool.
So yeah. Okay, let's approximate size of each is about 18 squares plus garage. 18 squares is pretty big. Plus garage, there's almost 20 squares. What's the total area of your land?
995, I think.
Okay, I'm actually gonna share a new site with you, which I haven't shared with you before. And John asked me a question regarding zoning and everything. This is a site called Land Checker. And this has to do with all the planning and everything. And what you can do over here, you can go in here, select your suburb. Now, I think they've already got that in Melbourne and New South Wales, and the Queensland site is actually just about. They're adding the Queensland one very soon. So let's say it's Carrum, or I can just go in here, go into the property matchmaker and search by property address. This site is all about zoning, and have a play around with this. It's called landchecker.com.au. It's pretty good. If you are even looking for sites within the special zoning. So usually you find a site, then go and check the zoning. This site is a little bit different because over here you actually check the site and check this. I mean, you pick up the site based on the zoning first. So yeah, so planning overlays, it's got an SBO overlay, which is special building overlay to identify land in urban areas liable to inundation by overland flows from the urban drainage system as determined by or in consultation with floodplain management authority to ensure the development maintains the free passage, temporary passage. So it's actually probably because of this. And I'm not sure how these people managed to actually build it. Because if I click on this property on the side, this also has the same overlay on it, but to what degree? So to what degree is actually determined by this map right here. So I think what I think logically is that this side has more than any of these two, and that's why they've not been able to get the yield that they wanted. Prohibited uses, you click on it, not that much. What are they asking for it?
They bought it for $965. At the moment, they're advertised anywhere between $920 to $980. And I spoke to him. He goes, if they sell it for what they bought, they're happy.
Why are they selling it though?
That's what he won't tell me, and I have to go and see the other agents. And I asked for if there's a longer settlement. They goes, no, they're looking at only 60 days. They want to move on. And I tried to suss out if he's a developer or is just an investor. He didn't know at this stage.
Bollocks.
I was gonna go. Yeah, I was gonna go today. There was an inspection, but I couldn't make it, so I'm gonna go on Saturday.
Don't commit to this site until you've seen a town planner and an architect.
Yeah, absolutely. No, not at all.
So okay, let's look at your numbers here. This $1,500 is too low. But where did you get 180 from?
Well, it's 180 square meters. I allowed not 18 squares. I think there's an error on the other.
Yeah, so what you need to do, if you're really interested in something like this, you need to see an architect to be able to be double sure of what you can do on this. And when you see an architect, it may cost you $500-600, but it'll be a good exercise of what they say, and they can give you some schematics. Based on those schematics, you can actually do your numbers properly. Because I think at the moment 180 as an area for a 3-bedder is too large. A 3-bedder is usually no more than 150, 160. 4-bedder is 180.
Right.
And your price here 1500, you got to bring it, you got to push it up to at least 1600 or 1700 at least.
Okay. And the 180 for a 4-bedder, that does it include garage, or is the garage is additional?
Get the actual built area space. So they will give you a breakdown of the garage, first floor and ground floor, and balcony if there is one, and private open space. So there are 5 things that they'll break it down into. Private open space, 1, garage, first floor, ground floor, and balcony if there is one. So it's usually about 5 different, unless it's a 3-story townhouse, so there'll be a second floor there as well. But if not, that's what it will be.
Okay, Ben can guide me on this, yeah? ArchiSign.
Yeah, ArcSign can actually find out these details from you, but they actually have a town planner that works in-house with them. Look, this is 720. I can accept that you'll be able to sell them at 720. You would have figured out what it is, but the size of those what you allowed there and the construction cost is a little bit lower. The size is higher and the construction cost is lower. Look, you might end up with the similar number. But what you want to do is verify whether or not you can put 4 on them. And from when you look at the neighbors, it seems that you can.
That's right. That's what I based it on. And speaking to the council, they said you should be able to achieve it. But you're right. I need to get validation from a town planner architect.
Yeah. Also, I feel this last unit might be a 2-bedder.
Mm-hmm. That's a very good point.
So you might have like 3 3-bedders and a 2-bedder.
Yeah.
So just be mindful of that, and that way, that's the only way you can actually do your numbers correctly.
Mm-hmm.
So yeah, for this scenario, I think these are the things, Satish, that you still need to do. Once you've got these things, then you can actually put a report together properly. Whether you want to go after this side or find another side and then do the same exercise, that's your call. But I would anything like this, I would go straight to the architect.
Yeah, I'm not boiled down or narrowing it down to this side. I will be going through that exercise. It was mainly to, experience putting a pack together as a project, doing a feasibility and running it past you, and also to see if 3 or 4 of us need to come together. How do we accelerate this? Because we have been very slow, because we haven't been able to get together as a group. I think we met once, and the second time I wasn't there, and then there's another meeting that someone else is going overseas. How do we come together and also eliminate the fear of ensuring the funding is upfront in the account? Can we put other things in place that the money can't be mishandled, and have some trust and get going with this? If you can advise on that would be great.
Okay, so if you wanna, let's say you were saying, how do I approach this? So the first thing you gotta do is get a site. And side by side, what you need to do is finding a site. You got to engage investors. So, whoops, sorry. This has to happen side by side because you can't settle on the side on your own. You got to have some investors by your side. So once you've got some sort of a commitment, even if it's like shake hand, that yes, I'm interested, then you know that okay, this is what I'm getting. The second step is that if you find a site without the permit, you need to go immediately to the architect. Next comes your due diligence, which will happen with the architect and town planner as well. And next comes your FISO, and next comes your project report. Next comes your engagement with investors again. You show them the report, and then you finalize investors. At the same time, if you got if you got investors are going good, great, but at the same time, if a site comes along and you don't want to let it go, sign a contract subject to 30% due diligence. Before you sign the
due diligence, what does that mean? 30%?
No, not 30%. 30 days due diligence clause. So if a site comes along, now, before you sign the contract, so I'll just put before signing, engage lawyer, because your lawyer needs to see the contract, and if you want to add due diligence clause to it, get your lawyer to actually add that clause for you. That way now you've got 30 days to decide whether or not you're going to go through with it. Correct?
Correct.
So you've got 30 days before you do that, and in that 30 days you can engage investors, find out what's going to happen.
That's true. Does that hold good for both private sale and auction scenario?
If you are a real developer, you don't buy sites in an auction.
Okay. Makes sense.
I never buy a site in an auction unless I don't know. A lot of cashed up developers, they might be able to do that. We never buy a property in auction. I never have, never will.
Yeah.
So I would suggest that you stay away and try and get that longer settlement if it hasn't got plans and permit, 30 days due diligence or whatever to be able to understand if it works. And then simultaneously you got to have some investors in there. So if you're going in, set up your structure that you need to do this. Your accountant will tell you what you need, and you set the structure up when you've got the investors ready. So if you set up the structure, and let's say when you set it up, you own all the 100 units or all the 100 shares, for example. When you transfer it to them and then that entity actually settles on it, they will be hit with another stamp duty at the time. So that is why the structure needs to be set up right at the end.
Right. Okay.
So the structure needs to be set up right at the end so that when you got all 4 investors with $250,000 each ready to go, that's when you set up the structure. And you set up the structure and you say, look, that's where your money is going. And you give them those shares and everything. But even then, let's say you've estimated that it's going to cost you $6,000 between setting up the structure and getting the lawyer to put everything together. Get that thing done simultaneously. When you're selling a unit trust, get the lawyer to set up the unit holders agreement as well, so that when the shares are issued, they're signing an agreement, the money is going in. And if your cost of setting it up is $6,000, get the 4 investors to put in the equal amount of money so that nothing's going out of your pocket if they decide to pull out.
Right.
Let's say you come to me and I say, yes, Satish, no problem, set it up. I'm in. You go out and you spend $2,500 with a trust with a corporate trustee, and then you go to the lawyer. The lawyer says $2,000 for the unit holders agreement. You're out of pocket $4,500. Then you come back to me and I say, Satish, sorry, I can't commit at this stage. I've got other commitments. Don't get caught into all of that.
So will that be item 1.8?
No, that is when
Set up the stuff.
Yeah, when the site comes along, yes. Or if you already know that these investors are the serious one, set up the structure. And if you know that this is $1 million, that's what we're going to need. Or what happens if you need more than $1 million? If you are getting these 4 people to come in and one of them says no, it won't be that. Let's say, why don't you say that, look, it's going to be 1.6 million. All of us need to have at least 400,000. And if one person doesn't have 400,000, then reduce the shareholding or whatever, because so that shareholding doesn't actually change.
Yes.
So you get them in, set up a bank entity so that all 4 know, let them park the money in there for anything that we need to do. That will tell you who's serious, who's not.
Yeah, that makes sense.
Because it's happened to us many times where people said that they were serious. We went out and spent all this money, and then they said, no, we're sorry, we don't want to, we're not interested anymore, or I've got this thing that's come up, so I can't put the money in. It'll happen all the time, but you don't want to be out of pocket, and you don't want anybody else to waste your time either. Put that in your unit holders agreement, that if somebody decides not to go ahead with this, they've got to reimburse you the full cost of the trust, because that trust is dead for you.
Yes, I'm just making a note.
Because it's not like that they can just, you can just transfer the units to somebody else. I mean, if you haven't signed the contract, you can still use it. But if you've signed the contract, they look at the date of when the trust was formed and when the contract was signed.
Yep.
If the trust has already exchanged, trust can exchange n number of units, n number of times, doesn't matter. But the contract, the date of sale on the contract has to be after all that changing hand has already happened.
Right. So after everything is changed, then the date of contract.
Yeah. So let's say you sign the contract today. In 30 days due diligence, you can't change. That means you have to change the trust. You have to form a new trust if the configuration is changing.
Okay. Yeah. That makes sense. I'm just making notes as you're talking.
I'm telling you right now, you have to check this with your accountant. Now your accountant will tell you, as far as he knows or she knows, so long as you haven't settled on the land, you can change hands. But I'm telling you that my accountants told me that he has been dragged into an audit that happened 3 years after the development had taken place. And he fought with the state revenue office saying that the land wasn't settled. That means if the settlement hasn't taken place, we could exchange units. But you can't. The moment you do that, I mean, you can, but whoever is coming in to buy those units will have to pay the stamp duty on the value of that unit. And the entity will then have to pay stamp duty on the value of the full land again.
Right. So the trust is set up, units are set up upfront, then you do your signing the contract, you do your due diligence, and then you keep going here. No change afterwards.
Yeah.
Okay.
So yeah, these are the things you gotta keep in mind. As I said, you gotta have your accountant and your lawyer engaged anytime you're setting this up, or you're coming together with different shareholders and unit holders. Yeah.
Okay, that's good.
Okay, so before we conclude today, I wanted to just let everybody know a few things. Number one, your journey has just started, so it's not finished yet. Second, I am available via email always. If you send me an email and I'm not able to reply within the next 24 hours, I will try my best to reply to it ASAP. But sometimes if I'm caught out, the reply could be delayed. But that doesn't mean that you can't send me an email. You can send me an email always. Once my online application for feasibility is launched, I will give you guys access to it, and you'll actually get access to it before I actually open it up to the main market. So you guys can run some numbers. You'll get some free feasos in that, and you'll be able to do it. Satish, I'm just going to mute you because there's a bit of background noise coming from there. Thank you so much, Satish.
Sure. Thank you.
So yeah, so access to Fiso. I will give this to you. I will give this access to you guys before it actually gets formally launched, so that you guys can test it out, play with it, do whatever you want to do with it. You also have 2 into one-on-ones with me. These one-on-ones are usually they usually happen online, or you can call me and have a chat with me or discuss anything that you want with me. Or the best way to do this is actually email me a project that you are doing. Send me everything that you can. Send me the reports. Send me the feasibility assumptions. I'll study all of them, and then we'll make a time so I can share my screen with you and give you my thoughts on it and give you the direction that you should be going in order to execute that development. Third, if any one of you ever wanted to be part of any of my projects, that's no problem at all. If whenever my project is launched with an IM or whatever, I can send an email out and you guys can be part of it. But if you want anything that's customizable, or you want to discuss a development with me, shoot me an email. We'll make a time. You can come to the office and we can discuss what you would like to do with this. So these are the main 4 things. I think the next one was basically Property Mogul. If you wanted to be part of it, you are more than welcome to shoot me an email or visit propertymogul.net, watch the webinar, see how we work and all of that. And you guys can email me and we make a time. You can come to the office, meet Sam, meet Igor, my business partners, and we can discuss your requirements in that scenario as well with you guys. Number 6 is the one-on-one mentoring. The one-on-one mentoring is basically you have me on phone, you have me on call, and everything that you are doing, I would recommend that you get into one-on-one mentoring when you are 100% serious that I'm going to do this project, or I'm going to do this project no matter how I do it. I'm going to find a project and do it. That's the time you do the one-on-one mentoring. If you wanted to discuss one-on-one mentoring with me, give me a call or shoot me an email. I'll call you back and we can discuss if you wanted to do one-on-one mentoring. This is one-on-one support. It's like having a sounding board who can look at different projects and deals that you are doing while you are doing them or before you actually get into them. That way, I'll be with you every step of the way. So if you send a feasibility to me on 10 projects, I've got to reply back to you on 10 projects or discuss these scenarios with you over the phone, or just share my screen and run the numbers with you and so on. So yeah, those are the 6 main things that I wanted to discuss in this thing. As I said, I'm always available via email. If it is urgent, super urgent or something, send me a text. I'll try my best to get back to you ASAP. But it just depends upon where I'm at, what I'm doing at that time. So yeah, do give me a call. I would try my best to support you in whatever way I can, in whatever way possible. And yeah, so now I have a request to make from all of you, and that is that if you guys could give me a video testimony about the course, not the 12-week program, because it may not be offered in the same format again, just the course and the delivery and the level of support that you've experienced, the content quality and all of that, that'll be great. I think after every webinar, there's been an email going out to everybody, but nobody's actually filled it up as yet. So I would really appreciate if I could get some video testimonies about your experience, the content, the quality of the content, the delivery, and whatever you've experienced. I'm not going to put words in your mouth. I would prefer that whatever you feel, it comes along. That'll be great. Yeah, if you say good things about me, that'll be fantastic. Yeah, if you want me to improve on something, please do not include that in that video. If you want me to improve, that's no problem at all. I do want to improve, but send that to me in an email, as a feedback and everything, and I will. I'm 100% transparent with everything that I do, and if you do send me some feedback, I will circulate it with all of you, so that all of you have it. But I'd really appreciate if I could get a video testimony from everybody on the course itself, on property development system, the content and the delivery and the level of support that you've experienced. So you guys still have your 2 one-on-ones, and you've got 12 months to actually claim these 2 one-on-ones. Even if you call me in 2 years time, I'm not the kind of person who's going to say sorry, your time's up. So I've never done that to anybody. I will not start doing that to anybody either. So yeah, if anybody would like to say anything about the course today, that'll be great as well. I just want, if anybody want to add something to it, or give me some feedback, or suggest something, just press the hand button. I'll unmute you so you can say and everybody can hear. Okay. Okay. Yes, Will.
Hello, Amba. Look, I just wanted to say that it's been a very good journey. I personally have been able to learn a lot and get clarity in some aspects that I didn't know before. And another very important thing out of this course that perhaps hasn't been highlighted when you're advertising for the course is the networking potential that this has. In my case, for example, I've been able to make John and some other guys that are in the same boat and ready to invest as well. And I think that the network potential that your course has, bringing like-minded individuals to the same group, is very valuable as well. So that's another important point to mention when you're advertising for your course and so on. And that, yeah, just wanted to say thanks for being transparent and giving us your feedback and providing this course.
You're very welcome, Will. And if you could say the same things in the video, that'll be fantastic. I would actually, if you, I don't know, if you record a video on your phone and then just email me, or upload it to YouTube and send me the link. On YouTube, you can actually upload unlisted videos that only people who have the link can get it. So look, that'll be great, because I would want to be able to use them on my website somehow. So really appreciate that.
I will 100% I'll do that. I'm up for sure.
No worries at all. Thanks, Will.
No worries.
Okay, John. Yes, John.
Hey, Amber, how you doing?
I'm very good, John.
That's good, mate. I just want to say thank you very much. It has been, and want to reiterate what Will has said. It's really your course and the information that you have given to us has really been inspirational, and also has allowed, I'm sure, not only myself but everybody else to understand this sector of the property market, and allowed us to grow in confidence of being able to move forward, not only as individually but also as a team. And the product that you have presented to us has been absolutely fantastic. So from a personal point of view, I want to thank you and congratulate you, and I'm sure I reflect and express how everybody else is feeling as well, and I would definitely put this in a video for you. And also, Will does make a very good point about the networking potential for the course that you have, particularly with those of us who are have been with you for the last 12 or 13 weeks. So on that point, I just want to take the opportunity to finally give anyone who hasn't made contact with myself, or those of us who are doing a joint venture, which would include myself and Will, and Shane, Casey, and Satish, up until recently, also Neil in New South Wales, who I spoke to recently, is going ahead with a project on his own, which is absolutely brilliant. So congratulations, Neil. Anybody else who is now really keen on joining us in a joint venture, the invitation and the opportunity is still there. So please get in contact with me. We really want to make something of this, and we're more than happy to have anybody else come on board. So yeah, thanks Amber.
Thank you so.
I'll be in contact with you.
Yeah, for sure.
In regards to our one-on-one.
Yep, no worries at all. Thank you so much, John. I really appreciate you, all the kind words. I really appreciate a video as well. Yeah, I'll be in touch with you shortly.
Sure.
Okay. Anybody else? I saw Ashley's hand go up and then it went down again. Okay, Ashley's here. Yes, Ashley.
Hi, Amber. Sorry, I just wanted to reiterate what the others have said. It's been very enlightening and innovative educational experience, I think, for me. And lots of words of wisdom, both structure and granular information. I'm sure even just one of those words of wisdom will be worth the price of entry for me. So thank you very much for that. That's I just wanted to say that.
Thank you so much, Ashley. Coming from you, being an economist, it's I actually take it as a compliment. Thank you so much. And actually, if you could do a video for me as well, that'll be fantastic. It's it'll just really help me for the next whenever the next course is launched.
Sure. We would like to.
No worries. Thank you so much. Okay. Anybody else? Okay, Satish, 1 second. Yes, Satish.
Hi, but I found it very informative, the entire course, and the real eye-opener for me is, the ability to do a joint venture with the fellow students, buy the land outright and use the pre-sale technique to service for the construction. That was absolutely, I think, is gold. And prior to doing this course, I had no idea. I was always thinking we need to come up with the money for the buying and also the build. That's a very good insight I got, and hopefully that's what the fellow students will be trying to do as joint venture. So overall, a great course, and thanks for all your help.
No worries at all. If you guys come together, if you guys put this project together here in Melbourne, and you bought the land, you got your pre-sales and everything, shoot me an email. I'll send you to the bank manager that I work with, and he's a senior manager with NAB. I'll send you his details, and he'll do his best to help you guys out.
Thanks, Emma.
No worries at all. Anybody else who would like to say something or add something or give me a feedback on the way the course has gone, or if I could improve it in some way, shape or form? I think most probably, I'm not sure if it's going to happen in 2018, but it may happen towards mid 2018 or a little bit later. That'll be a number 7 bonus that I've never announced it, but if I ever do a seminar, this class is going to get a free ticket to come and join the 3-day seminar, and we are already thinking about going that way. There's the whole website is actually being redone. In fact, I actually got there's a new development that we're going to start building soon. I just wanted to share that with you guys. I just got some details for that. Just give me 1 second. I'm just trying to find where that is. There it is. So 437 Main Street in Mordialloc. This is one of the renders for the front of that. It's got a basement. It's got 8 2-bedders here. And so we're gonna start building that very soon. The whole site is actually is going to undergo in the next couple of months or so. I think just after Christmas or something. You'll see a new website which will have the education arm, which will have the development arm, and the property mogul arm. So yeah, we are friends for life. And as I said, anytime you guys get stuck somewhere, you need to bounce off something, shoot me an email. I will try my best to give you advice, or at least point you in the right direction of where you need to be or how you need to fund it. If you guys are looking for funding of any side, I've got no connections with any finance company. I get no kickbacks from anybody. This is only purely to help my students. If you do, I have a mentoring student who's currently getting finance for his development, and I send him to the people that I know in the industry who can help him out. There are no kickbacks. I get no kickbacks from anybody. I'm not that kind of person who recommend you something just because, you know, I'll get something in return from somebody. So it's purely to help you guys. And by all means, you can contact me anytime. It's not over. Only the program is over. The education still continues. And if I ever do a seminar, as I said, I will send you guys an invite, or wherever it is happening. It will probably be a 3-day or something where you guys will have a free ticket to come and join and do the seminar. So yeah, that's it from me. Yeah, just remember this will be recorded, sent over there. So anytime you see that I haven't followed through on any one of these, you can tell me that I didn't follow through, but I'm telling you what I know that I will follow through on. So if anyone wanted to say something, otherwise it's 9:15 today, and I wish you guys all the very best and nothing but the best. And just remember this, that if you keep trying at it and you don't let this thing go away, you will do a project. And it's only the first one that takes the hardest. For me, it was the first 3 that were very hard. But I was in a very different situation than any one of you. I didn't have any serviceability. All I had was a little bit of cash that I could put somewhere and do something. So I had to be creative, to do creative deals and find JVs. JVs with landowners is a little bit tougher. I have been to more than 50 meetings and those 50 meetings were unsuccessful, because we went there, I did the work, I did the project report, I put the feasibility together, answered all the questions, and then it fizzled out for whatever reason. But don't give up. Don't give up. You just can't afford to give up. The whole idea is that you don't want to finish where you started. So you've done this course, you invested this time. Some of you have been absolutely regular, like sharp. You know, I could see that there were 3 minutes or 6 minutes to start, and you guys were there 5 minutes before the thing was going to start. And some of you haven't missed a single class, which is really, really great. And that's the level of commitment here. We're trying to figure out another way to offer another service where we can do the development management for you, and there's a fee for it and everything, but we haven't got it right amongst ourselves at the moment, of what we're going to actually do for you and what we're going to let you do on your own, whether you are in Victoria, New South Wales, or Queensland. If there's any time you want to ask a question for anything, feel free to shoot me an email. I think everybody has my phone number. That's my phone number. It's not 8. Just remember that there's no 8 there. It's just Amber. And I wish you guys all the very best. And hopefully I'll get a few video testimonies from you guys. That'll help me out a lot. Thank you so much for joining me. And John, I will be in touch with you shortly.